Hello and welcome to another update video about Doge. Dogecoin continues to drop. It's just hovering above a very important support level. That support will be at 7 cents. So if it drops below that level, then we can fasten the seatbelts. I believe then we are losing very important support levels, and we'll see far lower levels, and we're going to talk about that in this video. Before we do that, I want to take a look at the longer time frame count, the higher level time frame. Basically, I haven't labeled the entire chart, but my view is that Doge completed a wave 1, and that is currently the most reasonable idea or scenario, that Doge completed a wave 1 to the upside here in May 21, a 5-wave move. It actually looks quite good as a 5-wave move. Here an impulse. Not all coins did that. Many coins only topped in 3 waves. However, Doge, in my opinion, topped in 5, which is first of all a good piece of news here. And we can also look at the key level in terms of the retracement here. However, I mean, if we say, okay, we moved to an all-time high in 5 waves, basically considered a wave 1, then the move down would be considered an ABC correction in a wave 2. And I can actually label it quickly. For some reason it's disappeared off the chart. It did that actually before, but we can count this here as a wave A and a wave B. And now in the wave C would be part of the wave 2. So wave 1 to the upside, then the corrective wave 2, which consists of an ABC pattern. And it could even be a WXY. It doesn't really matter so much. There are various interpretations here how this can be labeled, this chart. To the upside, I wanted to take a look at the longer time frame target. I mean, let's assume we are doing this wave 1. Let's assume we are doing this wave 2. Let's assume we are, fairly close to the low is one thing, but obviously we can drop still another 30-40% from where we are. But if you consider from where we come, we have to assume we are fairly close to the low, because we've already dropped like 80-90%. But let's assume this is the count and we are going to recover and move up in a third wave in the next bull run. We can reach prices of at least the 1.618 Fibonacci extension level. Is at $1.27, possibly even $1.56. That would only be the wave 3. So that is the target range for the third wave. We would then look at a wave 4 to the downside and the wave 5 to the upside, and that could even reach the $2 level. Now that is a bit of a moon count. Long term, obviously, these can move much higher. But that obviously assumes that Dogecoin will actually recover and will move back in a bull run. Which I think, it has certainly the possibility and the probability to do so. The only thing is, and I just mentioned that we've dropped below the 88.7% Fib level. That is not really good. That is around 8.5 cents. That is sort of the last key Fib level here on the Fib ladder. It has to do with market sentiment. We have dropped quite considerably below that level now. Not as much as some other coins did. The problem is that when we broke below it initially here in June, we did retest it from below. The retest was successful. We came down lower. Then we tried to go through it. Well, we did actually, but couldn't hold it as support. So the price is back below it. And actually that is not really a good sign. Now, if that is not for too much of a it doesn't take too long to get out of this range, that is not too much of a problem. But what the bulls need to do here is to bring it very quickly back above the 8.5 cent level. However, the way the structure looks like, I don't think this is going to happen very quickly. So short term, we do expect some more downside before we can look at a recovery. But certainly what you can, what you should know is a move above the 8.5 cent level, staying above it would be a good sign, a first initial good sign that the overall downtrend might be over. But overall, I mean, I'm seeing this still as a 5-wave move down. Talked about in the last video, the moment we dropped out of this channel to the downside, the more bullish count here, the blue wave count, has been made very unlikely. I'm actually going to take it off the chart now. So the yellow count, which has been sort of the primary, is working out here. We moved down in a wave 1 of the recent high. We moved up in a wave 2. I think we're now in this third wave down. There'll be a wave 4 up and a wave 5 down. Initial key support here is the already mentioned 7-cent level. We talked about that in previous videos because it's a very clearly defined level. We had here resistance, here support, here support, and here support. And what Doge might be doing, might be putting in a head and shoulders pattern, which you can clearly see here. Many coins are actually currently doing that. So a little bit like that. Yeah, the neckline is the 7-cent level. And if we lose this 7-cent level, I could just take the height of this head here and add it to the possible neckline, to the breakout point, and it would send us down into the region around 3 cents. That is, to be honest, not a unlikely target. If we talk about, okay, the wave 3 is not even finished, there will be a wave 4 retracement and another wave 5 down. It wouldn't be too unlikely, I must tell you. It wouldn't be too unlikely. I think the move down here is an ending diagonal. So Fibonacci extension targets don't really help us too much. Yeah, because if I'm now looking at the 1.618, it would take us down into the negative range. So yeah, they don't help us too much. I think what helps us more in this sort of, so towards the end of this correction is just looking at key support resistance levels, looking at the wave structure, understanding the low is probably not yet in. Key support around 7 cents, as I said. Then we've got an initial or a very important swing low here at 5 cents. If we drop below that level, then we're making a new low below the June low. And then we could be looking at the 3-cent level, possibly, right? The problem is if we're really losing this level, you can see that if I add the VRVP, we'll see a lot of volume there. Then you can see that. Let me just zoom out a bit. You can see there's a bit of a cluster at least here. It's actually not dropping off that much, to be honest. This is not too bad. If I zoom in, maybe we see it a little bit better. Yeah, okay. Now where's it gone? Need to zoom in a bit. Here you can see actually there is quite a bit of a cluster here. So especially all the way down to the 5-cent level that I mentioned. Below that it will drop down. There's a bit more of a spike around the 3.5-cent level. That is pretty much in line with that head and shoulders target. But below that you have an insufficiency of historical volume. So if we lose the, let's call it the 3.5-3-cent level, we could come down quite quickly to 1 cent, which will be the next cluster of support. So yeah, so there are a few key levels that now are relevant. 7 cents, then 5 cents, then the range between 3.5 and 3. And below that, we're looking at the 1 cent level, actually. So they are all, to be honest, not unrealistic price levels anymore. We need to understand in the current space, all of these prices are realistic. It is dropping as long as it's dropping, and we have done enough to complete this correction. So Doge, like many other coins, technically, it doesn't need to drop any lower, but it probably will drop as long as the bear market is still running. And there are key levels where it can turn around, which I indicated in this video here. I don't think it's turning around at the 7-cent level yet. I don't think it's going to turn around at the 5-cent level, which it might do, but I don't think it will. I think it is going to head lower, and then we're talking maybe really about that 3 to 3.5 cent range for Doge. Okay, and that's my update about Dogecoin. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.